Good afternoon. My name is Campbell McCrary, and I'm a Vice President Capital Markets at Amvest Capital in New York. Welcome to the Amvest Capital Inc. live webinar with Skeena Resources Limited. Skeena trades on the TSX Venture as SKE and on the OTCQX as SKREF. Hope you'll enjoy today's program. It will also be available in replay mode. Amvest Capital is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. Please feel free to type in your questions in the question pane of the GoToWebinar control panel, or simply email them in. We'll try and ask the questions in real time or after the webinar. This call is hosted and recorded by Amvest Capital Inc. We refer to this disclaimer. Please note, this call is for informational purposes only. Today we have with us presenting Walter Coles Jr., President and CEO of Skeena. Walter has served as CEO and President for several Toronto Venture Stock Exchange listed junior mining and exploration and development companies throughout the past 7 years. Before that, he was 14 years in investment management and investment banking. Walter entered the mining business as part of an effort to develop a mineral resource discovered on family farmland in Virginia. We also have with us Paul Guedes, Vice President, Exploration and Resource Development at Skeena. Paul is actually broadcasting live from Eskay Creek itself in the Golden Triangle in Northwest British Columbia, and he's very excited to tell us about the current drilling program. Paul has more than 20 years of exploration and resource development experience in precious and base metals with a focus on economic geology. His career ranges from greenfield to brownfield exploration with major and junior mining companies, including Noranda Tech, Inco Technical Services, North American Palladium, Rainy River, and Barkerville. Following the presentation, members of Amvest Capital will ask questions of management. We also look forward to any questions that you send in, again, through just type in the questions in the question function of the GoToWebinar control panel system there. Hi, Walter. Welcome.
Hi, Campbell. Thanks for having us. It's a pleasure to be here, and we appreciate the opportunity to update your audience on two things. First, I'm going to go over the transaction that we announced last week with Barrick, and then Paul's going to launch into an update on our upcoming ongoing exploration program and what we hope and expect to achieve from the current drilling that's happening at Eskay now. So with that, we'll just launch into the presentation that we put together for you all, and we'll skip the obligatory forward-looking statements. And just as a reminder, Eskay Creek is our project is in the northwestern part of British Columbia, in an area that's prolific for mineral discoveries. It's called the Golden Triangle, and there we go. So just quickly, a little bit of history. We signed an option with Barrick on Eskay Creek back in December of 2017. It was a 3-year option that would afford us the opportunity to evaluate this past producing mine and see if there's, basically, could we find something that would be economic. As a history, we started drilling in the summer of 2018, and we also did some metallurgical work there. By September of 2018, we came up with a first resource, which was an underground constrained resource of almost 2 million ounces. And then really the I guess pivot point for us was when we started looking at this project as an open pit. And we came out in March of 2019 with an open pit resource of almost 4 million ounces. We followed that in November with the PEA, which even though we were using a $1,325 gold price, still generated really spectacular financial metrics, a 51% IRR and a payback of just over a year. And coming off of that, we have obviously concluded we wanted to own this asset. The issue for us was that Barrick, as part of the original deal, had a clause that would allow them to back into our project after we purchased it, and that was a bit of an obstacle for us. So thankfully, we were able to sit down with Barrick and renegotiate the terms of that original transaction into something that was more of a win for both parties. So we'll go over the terms of that. So these are the new terms. that we announced last week, Barrick is going to waive their back-end right, and in exchange for taking an equity position in Skeena. So when we close this transaction, Barrick is going to own 12.4% of the company. Also, Barrick will have half warrants, which will equate to about 11.25 million half warrants that will allow them to increase their ownership stake up to 17%. Barrick will also have a 1% NSR, that's a royalty on the entire Eskay Creek land package. They will have the right to appoint one person to our board of directors, and they will have a right to participate in future financings to maintain their ownership stake at the 12.4 or 17% after they exercise their half warrants. Some of the history of this asset, it's a legendary mine. It produced 3.3 million ounces of gold and 160 million ounces of silver. The average annual production was around 350,000 ounces of gold and 20 million ounces of silver. And the grade, the gold equivalent grade that came out of this underground mine was 2.5 ounces per ton gold equivalent. So the highest grade large mine that I've ever heard of in the mining industry. So really just a transformational deal that we put together with Barrick that gives us now 100% ownership of this asset, and really it just paves the way for us going forward to grow the size of this project. We didn't really have an incentive to do exploration as long as that back end right was sort of hanging over us. Now that we've set this deal with Barrick such that they're a partner with us, now we're going to launch into a really serious exploration program, or we already have, in fact. And as I mentioned, Paul's going to talk to you about that. But it's worth mentioning that as the gold price goes up, this project has tremendous leverage to the price of gold and silver. And you can see here the base case that I've already mentioned was $13.25. But if you move over towards $1,700 gold and $18 silver, you can see the incredible doubling of the after-tax NPV. It's almost $1.2 billion Canadian after tax, and the IRR is jumping up to 76%. Payback is down to 0.8 of a year. So just really a phenomenal metrics, and it will be interesting to see what happens to the price of gold over the next year or two. It seems to have some wind at the back in terms of the price, and the beautiful thing is we have a levered exposure to the price of gold through the Eskay Creek project. But one thing I want to emphasize is this PEA is based on that 4 million ounce resource that we put out in March of 2019. And what's so exciting to me is to see what Paul and his team will do on the exploration front over the next 6 to 12 months to grow this asset and hopefully make it much bigger. So with that, I'll turn it over to Paul to tell us about his strategy for exploration.
Hello, everybody. Yeah, it's a pleasure to be here. Thanks, Walt. That was a great synopsis of what we're talking about. It's tremendous. I actually just got back from the rigs about 15 minutes ago. We've got 3 rigs turning, 2 in the water tower zone, which we'll talk about here in a second, as well as in the 21A zone, where we actually just intersected a rarity. We've got visible gold, so that's quite exciting. Great times to be here ahead up at the site. So from our 2019 mineral resources, I think I want to emphasize what Walt was talking about earlier, right? We weren't really incentivized to do any exploration. We collected the data from Barrick, which had never seen the light of day since 2008. We essentially mined that data and looked at it through a different lens, and that being the open pit concept. And you can see here in our mineral resource statement, we have a distribution in between the inferred and the indicated categories of about, on a tonnage weighted basis, of about 1 to 1. And then the grade of the inferred is about 3 grams per ton. And you can see that's a bit of a disparity compared to the 6 or 5.9 grams per ton that we see in the indicated. Keep in mind, Eskay Creek is, a VMS type of mineralization. It's a very continuous and predictable ore body. So what we're expecting as we continue to infill, and I'll show you this in a slide here in a second, we're seeing exactly what we're supposed to be seeing with respect to volumes, tonnages, and grades. And if not, the odd time, we're also seeing improvements in grades, right? Typically, you get a lot of category conversion losses when you drill off a gold system that isn't as predictable, such as Red Lake or Hemlo or something like that. However, in this case, we're seeing exactly what we're supposed to be seeing, and we expect to up the inferred grade closer to the indicated category. So if we go to the next slide and let our little 3D animation go, you can see, based on what Walt was talking about earlier, on Barrick having used the gold price of $500 US an ounce. They were a victim of circumstance at the time. And you can see in the yellow all the mineralization that was originally mined out. You can see all the development in the light gray. And essentially the entire mine was cherry picked. But here what will happen is it'll fade out. And if we take that exact same resource, but constrain it by an open pit and lower the cutoff grade to 0.7 grams per ton, you can see just how much mineralization still exists. So again, this is testament to our technical team, having observed the fact that if we just look at it ever so slightly differently, what do we have left over? So if we advance to the next slide, well, again, like I said, we essentially snapped our fingers, mined data, and came up with 4 million ounces. We have not done any exploration to date. We let a few of our drill holes continue just to test some of the lower horizons. But essentially, that's what we're doing this year. Is we're going to be doing about 24,000 meters of our phase one, and I'll talk about that in a second. Subsequent to that, larger scale infill program, as well as we're dedicating 30% of our grand total budget into just strictly exploration to see if we can enhance that. And that's the mandate that Walt and I have come up with, is we want to see at least 5 million ounces here at greater than 5 grams per ton gold equivalent. So that's the gold and the silver. We can also, as I mentioned earlier, increase that grade through the infill. Again, we're going to hope to get that inferred grade of 3 closer to the indicated of 6. And again, as I talked about earlier, just exploratory drilling. It's also nice to be in this situation because most junior mining companies have to spend millions to get to this point. However, just looking at this again through a different lens, our discovery costs for 4 million ounces are only $3.75 an ounce gold equivalent to date. That's incredible. It's almost unheard of. So if we look at the section that I've demonstrated here, you can see all of the Skeena drill holes in the blue. The mineralization is in the orange, and we're essentially getting exactly what we're supposed to be seeing as we infill these zones to centers that would give us measured and indicated resources. And as I mentioned earlier, we also let a few drill holes go down further into the second sequence of mudstones. And that's what we've been talking about in our press releases. So we've got a mudstone that occurs directly below the main contact mudstone, which was historically mined by Barrick. And then, as I'll show you in a few slides from now, there's an even lower mudstone. And as we all know with VMS sequences, you get a cyclicity in these events. So a VMS typically occurs in clusters. You never see an isolated body just by itself. So if we go on to the next slide and we talk about the historical mine development, this is essentially just an oblique view of our PEA pits. In the dark gray, you can see all of the former development from the underground mine, and then all of the various zones. So the 21A zone sitting off to the right-hand side of the page, the hanging wall zone, the next zone, and the water tower zones are constrained over on the left-hand side as underground resources that are currently on the books. Now, if we go to the next slide, we're looking at the buffered mine developments. Under the terms of the Barrick option agreements, we were not allowed to drill within 25 meters of any historical mine development. So that constrained us with respect to advancing the project as quickly as we would like to. So that's why, as you can see, we were focusing on the 21A zone, the 21E zone, a little bit of drilling in the hanging wall, and what we're currently drilling off is the 21C zone. Again, we're converting that inferred to the indicated categories. And also we're doing some exploratory drilling down in the water tower zone. So again, if we move on to the next slide, slide 13, again, just another oblique view showing a little bit of the geology. Again, the PEA pits is transparent. You can see the block model at a 0.7 gram per ton gold equivalent. And namely, you can see that black line, which is the lower mudstone, largely untested, right? This is our encore. Essentially, we're going to start looking at that. Also in the water tower zone. The water tower zone is amazing. We get mineralization that occurs in there on the books of at least 10 meters of 10 grams. Barrick historically even drilled holes from underground and stopped in half-ounce mineralization. But again, if we come back to the original idea of a 45 gram per ton head grade and a ridiculously high cutoff, 10 grams per ton or even half an ounce never made it for Barrick at the time. So that entire water tower zone is completely open. What's also interesting is where it's going to intersect with that even lower mudstone, that large black band that you see down there. I was just at the rigs, again, like I said, about half an hour ago, and we're roughly in that area right now, and we're already seeing some pleasant surprises. Just moving to the next slide, again, you can see everything there, putting it into a little bit more context. And again, the idea that we get cyclicity in the events is very true, because if we look at the 22 zone off onto the far right side of the page, you can see how much of that mineralization is actually hosted in one of these feeders right in the even lower mudstone, where you get that big, thick aberration that occurs there. Moving on to the next slide. So that's just near mine that I was talking about. We've got so many targets to work with just there. However, even regionally, there's a considerable amount, and it's largely undrilled. And we've got soil anomalies, grab samples. I'll show you this all in a minute. But what's interesting is you can see here just how small the main resource is over on the left-hand side of the page relative to the strike length of what we have. What's interesting too is over on the right-hand side, you see another yellow blob that occurs at our property line called the McKay target. That was actually what was drilled off back in the 80s and found by Tom McKay. That's what actually got everybody into the Eskay Creek region. That thing has never been followed up on, right? So that's a big priority for us this year. If we just animate the slide, we can see how the contact mudstone's been eroded. And then secondly, if we animate the slide again, we can see how that lower mudstone's been eroded. So again, we have the ability to increase ounces through extrapolation in the contact mudstone, which was all the mineralization that was originally held. We've got that lower mudstone horizon, which we know is fertile. And again, even better, that third lower mudstone horizon. And keep in mind, these are very scantily drilled throughout the entire project area. Just advancing to the next slide, exploration, regional. So you can see over in the center towards maybe the right-hand side, that's the 21 zones. That's the current pit-constrained resources. And then a little further down to the left along strike, you can see the 22 zone. And you know those large orange blobs that you see there are gold in soil anomalies. And then we've also got graduated high-grade grab samples from all around the property that you can see there. So if we animate, we see the first trend. That's the main Eskay trend. And we plan to allocate 20,000 meters at least to that trend, as well as into the near mine environment. And if we animate again and we see the second trend, this is what actually excites me quite a bit, because we've got gold and soil anomalies. We've got high grade gold equivalent grab samples, not only historical ones, but from some of the work that my geologists did last year. There is only one drill hole on that entire second trend. It's never been assessed. So I personally am very excited to get in there and again, try and achieve our outcome of 5 million ounces at greater than 5 grams per ton, which we believe is a very attainable goal. So again, if I go to the next slide, number 17, just to tell you what I already told you, our phase 1 drilling, we're going to be outside of that 25 meter development buffer. And we're going to convert the inferred to the indicated and the measured categories so that we can fast track towards pre-feasibility. And then this is all hopefully going to be done, the phase 1 and the phase 2, by the end of this year, by the end of December 2020, right? So that we can advance to feasibility, maintain our timeline. We can't go to feasibility unless all that inferred is converted. We're also doing a geotechnical program, which will allow us to hopefully up our very conservative estimates that we used on pit wall angles for the open pit. Well, we shouldn't forget about slide 18, which is Snip. It's the little brother that's kind of fallen into the shadow of Eskay Creek. Snip produced some incredible results, not only when it was in production, but also from the work that we've done. We're actually currently working on constraining a resource estimate for that, which we should hopefully have out sooner than later. And what we're really excited about is targeting some of the areas that, again, didn't meet the cutoff grade at the time when Snip was in production. Because, again, they're producing ounce material. So anything in the 10, 15, even 20 grams per ton range would never have been economic. So there's all these tidbits that are floating around that entire deposit that were never followed up on. And we can see that in some of the drilling that we did. This is a section on the western end of the deposit. We were following up on a 1997 drill hole. It was underground 2610. They drilled 27 grams per ton gold over 3.5 meters. They didn't sample the entire thing. They're only sampling visually on what they thought was really, really good. We decided to go in and investigate that, confirm that actual mineralization, that it was in the right place and that it was true. And you can see at the bottom of the page, not only do we intersect and corroborate the existing zone, we actually expanded it down. And that's that 1,132 grams per ton over 1.5 meters. Keep in mind, that new occurrence is wide open in the 200 footwall corridor. You can also see our other drill hole, which by the looks of it didn't extend far enough. Unfortunately, what we did is we had drilled that hole first, thought we had the mineralization, drilled the second one, allowed it to go. So as soon as we get back into Snip, which will be within the next month, easily, we're going to very much expand on that and extend that drill hole, as well as other targets of opportunity to, again, not do any category conversion here, but expand the resources that we have at Snip. So again, just to wrap it all up, category conversion, de-risking, de-risking, de-risking. And that's the rapid advancement to PFS, large-scale exploration program, at least 20,000 meters, which will be results driven. So that's at least our bare minimum. Again, that global target. You know, we snapped our fingers, came up with 4 million ounces. The Encore is bringing it up to a more attainable goal of 5 at 5, at least. And largely that comes down to a $45 million budget for my department for the year. And that's largely it.
Great. Thank you very much. Walter, did you have anything to add, or should we move to Q&A?
Yeah, I guess I would just, sort of to wrap all that up into, what should investors be looking for over the next few months. There are three things Paul alluded to. The first is going to be a new resource that's coming out on a new 43101 resource that will be out on Snip in the next couple of weeks. The second really exciting thing is we're working with the Tahltan First Nation on a potential investment from them. We want them to be equity partners with us and our shareholders and enjoy the upside potential of this project. And I think that will be a real first for certainly for Skeena and the Tahltan. So that's an exciting upcoming milestone. Again, probably a couple weeks out. And then the third thing is, as Paul mentioned, we've got 3 rigs turning. We're going to ramp up to 8 to 10 rigs, and VMS deposits come in clusters. So we just don't know, when we might get lucky and stumble into something really exciting that takes this project to a whole nother level. So these next 6 months in front of us are going to be they're going to be exciting. So with that, Campbell, I think we should open it up to any questions that you have.
Definitely. The drill program sounds so excited. I want more of it. When could you get additional rigs online? And can you just, Walter, can you comment on a possible ramping up of that schedule?
I can take that, Walt. We've actually got, what is it, 1, 2, 3, 3 more drill rigs that are going to be mobilized and fully crewed by the 21st of this month. Mm-hmm. And then subsequent to that, in a few more weeks, we'll also have 2 more extra rigs coming in on the site.
Fantastic. Has it been hard to get rigs? Will it be hard? What's the rig procurement situation in BC?
It's actually, we're in a very good position. We've got a partnership with Talltech Drilling. So it's a consortium of geotech drilling associated with the Tahltan First Nation. And they have all the rigs that we need, both helicopter and ground-based rigs.
Excellent. And again, when do you expect the first drill results to come out to be press released or?
Yeah, we're the labs are actually in really good shape right now, and I'll be honest, we've got frequent flyer miles with our lab, so we can call in favors and trump the line. So basically, within the month, we should be seeing
Right.
assays and drill results.
And then any kind of time frame for additional metallurgical work and getting met samples to the lab?
Yeah, I'll take that one. We are putting together core samples right now. They're being sent to the labs, and they will be converted into concentrate samples. And then we will be sending those concentrate samples to smelters around the world to firm up some of the terms that we had that we used as the basis for the PEA in terms of net smelter payability on the concentrate that we would create.
Got it. Thank you. Stuart?
Yeah, thanks for that, and congrats to the Skeena team on the Barrick deal and removing that overhang. Just with the drilling, a huge program coming up for the rest of the year, and whilst you touched on some of the clusters, you find in the VMS systems. So what percentage of the drilling is targeting some of the greenfield, prospects versus, resource expansion versus increasing the resource confidence?
Yeah, so Paul mentioned that approximately 30% of the drill budget is dedicated to exploration, but I would add that we kind of get a little bit of a two for one in the infill drilling that we're doing, because we can let those infill holes run deeper and target the lower mudstone layer, and then the next mudstone layer that's even deeper than that, which we call the even lower, or the EL mudstone layer. Is that accurate, Paul?
I couldn't have said it any better myself, Walt.
Okay.
Very good. And the deposit to the south, Mackay, just past Mackay, who owns that?
I can take that, Walt. That's
yeah,
sure. Oh, no, go ahead, Walt, if you want.
Well, I mean, the land to the south of us is Eskay Mining. I can't speak to the to what sort of mineralization is down there. I mean, maybe that's Paul. Do you have anything to add?
Yeah, the exploration that occurred down there historically was very piecemeal, based on shoestring budgets. So you see just limited drilling in certain locations. When they would get into something, the next company would take over and essentially twin that hole so they could generate excitement, raise some money, and then it would get forgotten about. So all of the drilling that's down in that area, all the way up to Eskay Creek, is very, very scarcely drilled, and maybe only tests the top 100 meters, if that.
Got it. Thanks for that. Gabe?
Sure. Hey, Walt and Paul. Last time you were on the program, we had sort of ended the show with some exciting surprises to be coming up. So thank you for delivering on those. I appreciate that. And anyone that picked up afterwards would be appreciative of that too, I think. So just focusing on what's next in terms of the rest of the year, you mentioned drill results coming and things to be excited about now going forward. Do you have any impediments to that in terms of permitting? Is there anything you're missing to kind of just hit it full steam?
Yeah, I mean, we're in a unique situation because it's a brownfield site. So there's certain aspects of the project that are already permitted, and other aspects of the project that will need fresh permits on. So we're initiating discussions with the province and the regulators to get a better handle on how long the permitting is going to take. Our base case timeline on the project is to finish, as Paul said, as much of the infill drilling as we can in the balance of this year. And then it's to put out a pre-feasibility study in the first half of next year, followed 6 months later, or within 6 months of that, by a feasibility study. Then on the back of the feasibility study, we would probably announce project financing, and with the idea of being in construction in the beginning of 2022. And our chief operating officer, Shane Williams, is a proponent of the idea of like a staged construction process, that as we get certain things permitted, we'll build those. And then as other permits come in, we can add that to the project. So our base case is a 2-year construction timeframe that would put us into production in the first quarter of 2024.
Got it. And with the studies that are coming out, are you going to be using like staggered gold pricing to show sort of what it would look like in current environment, or what's your view on that?
You know, I mean, it feels like gold prices are continuing to rise,
Sure.
but I'm not going to try to predict where the gold price is going to be when we put a pin in it for the pre-feasibility study. But we'll try to be reasonable and conservative, and we'll do the study at a discount to whatever the prevailing spot price is at that time. Though having said that, we'll certainly include sensitivity tables so that an investor can run any scenario they want to and see what the project IRR and NPV will look like at a whole bunch of different gold and silver prices.
Great. And in terms of the what's going to be included in that PEA, will it be all the stuff you're doing the balance of this year, or where's the cutoff there? Yeah.
So what I look for in the pre-feasibility study is I hope it's going to be a significantly larger project. If Paul is able to deliver on, at least 5 million ounces and improve the grade from 4.3 to 5 grams, that's going to flow through and have a real meaningful impact on the project profitability and the IRR. The other very interesting opportunity is Snip. Like we're about to put out a resource on Snip, and then the next step from there is having our engineering team look at the possibility of combining Snip and Eskay Creek into a single project. It's approximately 40 kilometers between Snip and Eskay Creek, so we might be able to mine at Snip and truck the ore over to a central processing facility at Eskay, and that would be another way for us to make this into not a 300,000 ounce a year project, but maybe we can get it to 400 or 450. We'll just see what comes out of the drill bit and the engineering studies over the next 12 months.
Great.
But I think our odds of making this a bigger project are very real.
Good to hear. Excellent. Thank you.
We recall that Seabridge has a property called Snip as well. Is it connected, or is it related? Is there any relationship there?
Yeah, it goes back to, gosh, I want to say maybe 2016. Seabridge bought a company called Snip Gold, and Snip Gold had the land surrounding the old Snip mine, which at that time, that was right around the time we optioned the Snip project from Barrick. So I think that historical company, Snip Gold, was referencing the Snip mine because they were hoping to discover another deposit like Snip on their ground.
Okay, so that's a good answer. Thank you. Why would Barrick have sold you an option in the first place? So I guess you get that a lot, but
yeah, sure. Well, look, the best kind of deals are win-win deals, and we knew that Barrick, had like 30-ish projects in their closed, I guess they call it their closure portfolio, and those are assets that, in many cases, Barrick ended up with those assets because they acquired other companies, and the other companies had already closed those mines down, and they're kind of a bit of a headache because they take up management time, they take up staff time, and they're not generating any revenue. And often they're reclamation liabilities, environmental monitoring requirements. So we approached Barrick and said, maybe we could help sort of alleviate these headaches, option us these assets, let us investigate them, and if we can find something economic, then we'll of course exercise the option, and we'll take over those sort of legacy headaches for Barrick. And then you can see what's transpired with this, with our deal with them on Eskay Creek is, they're going to have a meaningful position in Skeena. They're going to own 12%, able to increase that to 17%. And look, I mean, they told us that Eskay in its current state is not a tier 1 asset according to their definition.
Mm-hmm.
But I hope that their view is that we've done a good job, and we might be able to grow it into a tier 1 asset. And so if they have a position in Skeena, they have a lot of options. They could sell their stock at a nice profit. They could, maybe they make a bid for the company if it gets big enough. So look, we like all those outcomes. So it's again, it's a win-win kind of transaction.
Insider ownership and institutional ownership, and any names that stand out, and then what, and percentage retail?
Yeah, I mean, because it's a public company, it's always shifting. I mean, we don't know
Yeah.
when an institution is necessarily selling or buying in the open market. So, my guess is it's probably 60% institutional and probably 40% individuals in the ownership base right now. In terms of the insider ownership of the company or management and directors, on a diluted basis, it's probably just over 10%, 11%.
Okay, thank you.
And just on like the expenditure that Skeena's had on Eskay Creek and Snip, can you comment on that?
You mean how much money have we spent on these?
Yeah, Skeena spent on Eskay Creek since the option, and then also on Snip.
Yeah. Well, I'll start by saying we've spent about 20 million on Snip, and on Eskay, I think we're around 25 million right now, and it's just amazing. A project, a deposit, a great deposit will just give you an incredible return for the amount of money you spend on it. And look, Snip's a lot harder. It's narrow, high grade, and Eskay is this VMS that has incredible continuity and predictability.
Yeah. And on Snip with Hochschild. And on Snip with Hochschild.
Yep, that's right. Hochschild has an option on Snip. It's good until October of 2021. And if they exercise their option, they have to spend 2 times what we've spent. And in addition, Skeena would be carried for another 0.75 times what we spent before we would be diluted in the JV. So the net of it is about 2.75 times or multiple over what we have spent at Snip for them to earn in. But they've told me that they want to see something over 1 million ounces and probably a new discovery before they would exercise their option to come in. So I don't think we're there yet for them, but we would certainly love to have them as a partner. Their Hochschild are considered one of the best underground miners in the world. They'd be a terrific partner on Eskay Creek, I'm sorry, on Snip. And then I'd add that if they came in, they'd probably cover all the development costs. So Skeena wouldn't have to spend that capital.
Yeah, great. You win-win. Yeah, that's great. You win-win. Thanks for that.
Sure.
Well, some questions the audience wants to know about. The buffer zone. Can you discuss a little bit about that? I mean, is it opened up yet? Is it included in the resource? Are you going to include in the resource?
Yeah, I guess there are 2 buffer zones I'd mentioned. There's the one that Barrick put on around all of their historic workings. So we're not allowed to, for instance, go investigate Albino Lake and say, see, how many ounces are sitting in those waste dumps that are there. That buffer will continue until we close this transaction with Barrick. So we're expecting to close in the early part of Q4. And once we do, then we have free reign to go and drill inside the 25-meter buffer around historical workings. There's a second little buffer that was applied by SRK to the resource estimate at Eskay, and that's a 3-meter buffer around historic workings. So all of the historical assay data, I mean, we used it and we've computed how many ounces are sitting in that 3-meter buffer, and it's significant. And our hope is that once we can start drilling inside the 25-meter buffer, we'll go drill through historic workings. And our hope is that we can maybe convince SRK to let us include or shrink that 3-meter buffer maybe to 1.5 meters and add some more ounces that way.
Okay, got it. And this sort of thing would be hopefully happening in 2020 for the reports in 2021.
Muted.
Yes.
Unmuted.
Got it.
Yes.
Okay. Some more questions around the balance sheet and cash burn and things like that. Can you talk about, are you fully funded for this drill program you got going on right now, and sort of where does the current money take you at the current timeline?
Yeah, we've got about $50 million of cash in the treasury, almost that amount. So we're funded for the balance of the year. We do plan to list on the Toronto Senior Exchange in August, and shortly after that we'll be filing a shelf registration, probably to the tune of about a $200 million registration. And the way I look at that is it's good for 25 months. So I'd expect that we would do a capital raise at some point at the end of this year, the beginning of next year, to raise funding to support the pre-feasibility and the feasibility studies for next year. And the budget on those is around 35 million. And then as I mentioned, I expect we'd start to investigate project financing after we publish the pre-feasibility study in the second half of next year. And I like the idea of having the shelf registration active, such that if we wanted to raise the equity component of the CapEx, we could do it opportunistically.
Sure. Okay, thank you for that.
Our understanding is that miners in the Golden Triangle are able to extract about 75,000 tons per year. So if there is a mining method that can provide targeted extraction versus operational underground development, and was offered by a First Nation-owned company, would that benefit shareholders and be considered as a way to de-risk all the upcoming studies, et cetera?
Gosh, that's a complicated question. I'm not sure I even understood the question, to tell you the truth. Paul, do you have any thoughts on that?
Yeah, I can comment. I think I know what the question involves. In British Columbia, you can get what's called a small mines permit, and basically the max that you can move in a year is 5,000 tons. We're talking about a much more considerable operation at Eskay Creek. We're probably not going to have to take a metallurgical bulk tonnage sample. However, at Snip, that possibility exists, because under the small mines permit, again, depending on the resource, the economics, 5,000 tons may work. And, definitely, we've got a wonderful relationship with the Tahltan Nation. We're willing to accept all interested parties.
All right. Another question. Can you explain again the agreed contractual constraint you cited drilling around the pit?
Yeah, again, until we own the asset, Barrick has always insisted that we not work within 25 meters of historic buildings, underground stopes. We can't open the underground mine up. We can't touch the tailing storage facilities or the waste dumps. And that was the same restriction on the Snip option as well. So it wasn't until we purchased Snip and owned it 100% that we were able to open up the underground and go into it. And it was the same on Eskay. But I'm happy to reiterate that as soon as we close this transaction with Barrick and we own Eskay 100%, that restriction falls away.
Thank you.
Yeah, you must be excited to be able to go test some of those historical areas.
Yeah, it's low hanging fruit. So
Yeah.
it's like, you know, it's less risky exploration than pure like grassroots, you know, targeting, if you will.
Yeah, definitely. And so on that, have you found, any operational difficulties while working above some of these old development openings and stopes?
I'm sorry, you're asking, did we find any operational difficulties?
While working above some of the old development openings and stopes?
Yeah, so the stopes were backfilled at Eskay Creek with cement and river rock. So that certainly takes away some of the challenges where, as we're doing open pit mining, we might come into voids. I believe the transport tunnels are still open. Paul, you want to add anything to that?
Yeah, that's correct. Like the whole mine was drift and fill. All of the development is obviously still open unless it's caved in. But operationally, from a drilling perspective, we've got no issues. There's no open cavities or voids that expose themselves at surface. So we have free rent of the property. Again, we just can't put a drill bit into that development buffer. That's the only restriction right now.
Yeah, got it. And you're mentioning PFS second half of 2021. What about the?
No, the PFS will be the first half of next year, and feasibility would be the second half of next year.
Got it. That was my question. So thanks for that.
Okay.
Gabe?
Yep. So when you look at valuation of the company, I know obviously this is sort of our job here, sitting as investors, but when you pull up the comp table you had on the slide, and you look at what you have now, what you could potentially get going forward. I guess that's an assumption we all make. But how do you see yourself valued today in the market vis-a-vis your peers?
Well, I guess I'm more forward looking, and I do have a belief that Paul will grow this project to over 5 million ounces at 5 grams, and I think that will lead to a significant increase in the project NPV, the after-tax NPV, and typical development projects that have decent grade and are in a decent jurisdiction, they're typically trading at like 0.7, 0.8 times NAV. So I would argue that on the spot price is probably the right thing to use for that valuation calculation. Mm-hmm. So I believe we're maybe right now maybe around 0.4. I mean, it always depends. There's so many different variables that you can put in, different assumptions. But to me, I'm most concerned with seeing us grow this after-tax NPV over the next 12 months, and I believe that this is I've said it before. I think this is the best open pit project that's open pit gold project in a politically stable jurisdiction with strong First Nation partners. It's the best open pit project in the world held by a small junior company. So I think at the end of the day, this project ought to trade at a premium to other open pit projects around the world because the grade is just so spectacular. So bringing that back to where do we end up? I hope that we'll eventually see this project trade at 1 times NAV, mm-hmm. Which is the project same thing as the project NPV. And I hope that over the next 12 months, we'll significantly grow that NPV. And that translates into a higher stock price.
Yeah, and it's much more straightforward now that you've got 100%. Is that transaction closing, days, months? When is it officially in your hands?
I mean, I hope that we'll be able to close it in September.
Okay, thanks. Campbell?
Yeah, how much of your treasury is from flow-through finance funds?
I want to say right now we've got about 35 million in flow through and about 15 million of hard dollar.
Got it. And does Barrick have a commitment to participate in future financings?
Barrick's is not required to participate, but they asked for a right to participate in all future financings.
Got it. Thank you.
And well, would you like to comment on any of the infrastructure you inherited in place in the area, which will assist with improving economics at your end?
Yeah, we're really lucky because this is a brownfield site. The roads are built. We have hydroelectric facilities 7 kilometers away from Eskay Creek. Eskay and Snip were historically powered by diesel and propane. Now we can plug into cheap hydro power. So that's really important for the cost structure of these two projects. There's basically been a paradigm shift. I'm told that historically energy would amount for as much as 50% of the OPEX. And Ausenco's, guided me that, now that we have hydropower, our energy cost as a percentage of OPEX will be closer to around 10%. So you can see it's a dramatic shift in the cost structure for these projects because they're brownfield sites.
Yeah, most definitely. And then looking forward to production, you'll be producing concentrate, and you mentioned you were starting to, as part of the metallurgical work, sending some concentrate samples offshore to do some testing.
Well, there's one more aspect that we're investigating, and that's adding a gravity circuit to the proposed mill. That's something that was used both at Snip and at Eskay Creek historically. And so that may be a way for us to capture a better payability on some proportion of the gold that we would produce.
Yeah, gotcha. And one question just came in kind of back on that point that Campbell had with Barrick. Is there a limit or a cap to their ownership at 17%, or it's open?
Great question. Actually, there is. Barrick, as part of the deal, agreed to an 18-month standstill. So they are precluded from going over 19.9% for 18 months after we close this transaction.
Got it. Thank you.
And maybe just a question for Paul, since we have him on and it's topical. Can you comment a little bit on COVID? What's that looking like over there? And on site, have you seen any, what's been the impact for you and your guys?
Fabulous question. I'm so glad you guys asked that. We're actually extremely proud of our COVID plan, and it basically boils down to one very simple mandate, and that is zero harm. So the guts of this are, we have isolated camps. They're on scheduled rotations. If there are any signs or symptoms, we instantaneously have the capacity to quarantine people, assess them. We have pretty much our own nurse practitioner on site doing temperatures and recording and making sure that everything is going well. We also don't want to risk essentially anything. So we're chartering our own flights. None of our staff or team members or contractors will be entering any airports. And at the first signs of anything, again, we have the measures in place to accommodate it. What does that mean from a day-to-day workflow? I'm really impressed actually with how seriously everybody is taking this. They're not being lackadaisical. They're social distancing. People are gloving up. They're wearing masks. And I'm really proud of the team for how they're accepting this.
Great. I'm glad you're safe out there, and so is the rest of the team. I'll just ask one more question from the audience, and then I'll move it to Campbell. Is there an existing road between Snip and Eskay for this plan? And I guess I'll follow up on that question. I think it's been talked about before, but will you be putting out any sort of official numbers on a scenario where you bring that ore in, the Snip ore, into the Eskay plan, whether it's just like a scoping level study or some sort of trade-off study?
Yeah, great questions. Whoever asked those, very insightful. The first question on the road, we have a partner in Seabridge on that road, because Seabridge needs a road to get to the Iskut project. So Seabridge owns the ground that the road would go on. So they took the lead applying to the province for a permit to build that road. I'm happy to say that the permits have been received. So the next step is either a discussion with Seabridge. Do they want to split the road cost with us, or will we take it on entirely ourselves? And I believe the budget on the road, and please take this with a grain of salt, but something like 7 to 8 million Canadian to extend the road 17 kilometers down a flat river valley to be able to connect Snip into Eskay Creek. So we're working on that, and that leads to the next question of some sort of preliminary analysis of what the economics would look like. So we're about to release the resource on Snip. Once we release the resource, we are engaging Ausenco and AGP, our two primary sort of mining engineering consultancies, to do a high-level review for us on do the economics make sense to put these two projects together? Assuming their very high-level review is positive, then we would probably proceed to a PEA update this fall that would then sort of show what those economics really look like. Now remember, to move from PEA to pre-feasibility, we have to have all of the resource into the measured and indicated category. The resource that we're going to put out on Snip is going to be a combination of indicated and inferred. So if the PEA is a strong, if it looks like we're going to do a PEA and it's decent, then the next thing we'll have to do is go back in and do infill drilling at Snip as well.
Got it. Okay. Well, very busy balance of the year, so looking forward to it. Yep.
Thanks. I think we've reached the top of our hour, and wanted to hear a closing remark from Paul, and then Walter, you can kind of wrap it up, and we'll till we meet again. So, Paul, why are you so excited?
Again, I think it just boils down to our original plan. 4 million ounces, looking at it through a different lens, snapping our fingers, creating a resource, and not having done any exploration. So with all of these targets out there, achieving our goal of 5 at 5 is very, very attainable. And I'm really excited about this upcoming field season. And I haven't had 10 drigs going in a while, so this will be nice to get that going as well.
It must sound really, really nice hearing 10 going at the same time.
Yeah. Exactly. You got to love that hum you get on the horizon.
So I'll just leave a little anecdote or a conversation I had in the last 2 weeks with a former Barrick employee who was in charge of exploration at Eskay in the years between like 2004 and when they decided to shut the mine down in 2007. And he told me it was really frustrating because they would do exploration programs every summer, and they would hit things that were 8 to 10 grams. And he would be really excited about it, but he would go to the engineering department and they would always tell him it's not good enough. Like, unless it was 25 grams, it's not good enough. And the reason that's an important sort of, bit of history is because I think it gives me a lot of confidence that Paul is going to go out and find lots of material that was left over here that just didn't meet the cutoff grades of what they were looking for back in in the 90s and the early 2000s. So I think we're just scratching the surface on what this project potential could be, and it's going to be it's going to be really exciting to see what the assays are that come in over the next couple months. So thanks for everybody's support and enthusiasm, and we wouldn't be at this point if we didn't have the backing of our shareholders. So hopefully we'll be very happy over the next 12 to 18 months.
Excellent. Thank you everyone for tuning in. When you log out, and a few days later, you'll get some requests for feedback. It's very important for the company in myriad of ways, and really say anything you want. And follow Skeena on LinkedIn. I think you're on Twitter as well. So also get some good updates there. And good day, everyone. Thank you.
Thank you.
Thanks, Campbell.
Thanks, Walter. Thanks, Paul.
Thanks for having us.
All right.